You gotta tell me why you call that uranium, they call it yellow cake. It's so fascinating. I just feel like eating a snack, man, whenever I see that, I hear that word. All right, guys. So this is it. This is Steve Penny's Silverchartist is a uranium miner portfolio PF. So I took it off December 18th, 2020. They're right there. I try to take the ticker. Sometimes it's the American version and sometimes the Canadian, but I just got the one that had the most data. So always check before. The chart patterns are the same. It's just the currency on the scale is going to be slightly different. And that's what I did. So remember, Steve has his insane free newsletter. I'm contributing weekly. North Star is contributing weekly. Jeff Clark contributing weekly. It's just insane. So use top right corner, there should be a hover card. You click on that. You could sign up. It's free. Just put in your email or down in the description. Every Sunday it's out, so might as well sign up now and get all that insane content in just one easy location, guys. Insane stuff. And even for this week, I'm taking a request, see what you guys like, and I'm always willing to help you guys out, guys. All right, that's it. So let's do the Ichimoku cloud. All right, let's do the monthly Ichimoku cloud. So here, just to show you how early we are in the, it just woke up the uranium sector. Huge downtrend. Remember that red cloud is the Ichimoku cloud defined resistance. Let me scoot that. Oh. Just descending, huge volume defined base for UEX Corp, which is UEX Corp, and exploded out of this base. The 1 year 3-year moving average is starting to turn up above it. So this is just natural reaction of that base. Let me see if I could find some trend line right here. You see how it's the price action is holding back because you're actually hitting monthly defined support, broke down, support, resistance, pivoting, support, broke down, resistance, right here, resistance. But the difference is right now is the price action had time to put in the higher lows. The moving averages are starting to get flat, so the momentum is not against you as much as each time I try to break out here. Often people, look, it's breaking out, but they forget to take in consideration that you're still in a long trend, so this takes a few hits. And right now, look at the cloud, how thin it is. There's an opportunity here to escape the cloud, go above, and eventually that flattening cloud is going to create a green, inclining, moving average, inclining Ichimoku cloud defined uptrend. So we're very close. So this is actually, I call this the bullish transition zone. When you're above, I got my shortcuts. When you're above a important breakout, but you're still below a pivot line or some important descending trend line. So you could bounce back down here and then one more time. And then once you're out of the cloud, then you're in a beautiful new uptrend, guys. And look at that vacuum. This is the last breakout line, 29 cents. You're right there. Once you're above 29 cents, let's get a target in there for you guys. So this conservative target, measured move, 179%. So this would be the first measured move, 179%. And bring you pretty much here in this congestion area. So it would be that first target, 79 cents. So as soon as you break out above 28, target 79. So that's over 100% in this congestion area. Very, very early, guys. UEC, Uranium Energy Corp. Monthly chart. They all look pretty much the same. Volume defined base. Whoa. Wait, what's the color? Background. There you go. The cloud's thinning. Trying to go above, but that's resistance. You see how the wicks, they came in, they brought you back in here, try to go through. No. Price action got back down, but look at that. You're starting to create green Ichimoku clouds, or you're starting to define an uptrend, inclining. 1 year, 3 year moving averages are about to do a crossover, very bullish. So this could pull back, maybe all the way down here to this volume defined support node. Just make it lighter. And if it bounces back here, low risk entry here for the high reward, because you're starting to define a monthly defined uptrend. And once you get up above 180, let's get that measured move. Non-greedy, 154%. Right about here. And this makes sense. Always look when you have targets, and then after that, they're to the moon, but make sure they make sense, right? That you're, if you start hitting some monthly defined resistance, then okay, if the target's like above it, there's good chances you might touch it, might, if you're lucky, seep through it. But if the target's in line with the previous congestion area, like here, this zone here, then you know your target could be between 390 and all the way to 320. So right now, sitting at 163. Let's put the labels. Name, UEC. Labels. Last price name. Okay, here it's at 163. So a close above 180, above out of the cloud, and off you go to a double bagger. Double bagger? Next gen, explosive, already above the clouds. So right here, it's starting to hit that all-time defined monthly resistance. What else do I see here? Bullish transit. Good things happen when you're above a 1 year and 3 year moving average. Remember, on the log scale, anything that's in a fiat, denominated in something that's debased exponentially, you could look at stock charts. Even on the short term, they could move exponentially upwards because the currency they're based in is actually being debased. See, broke out this trend line right here, then a horizontal breakout line right here. Pull, flag, pull, hitting resistance right here. Above volume defined base. Right there, very, very bullish. So right now, we could expect maybe a pullback, a consolidation right below this breakout line. And this one after that, it's pretty much the sky's the limit. Good things happen when you're above inclining 1 year, 3 year moving average. It's greedy targets. 250%. So maybe a 250% move above this breakout line right here. So if you get a monthly close above $4 about, a round number, especially if it's above a round number, it's great. Then that target about 1360, guys. As long as the price action stays above the 1 year moving average, see how it never closed? Oh, maybe here a little bit, turbulence, last move up, 1 year moving average respected. Once you start closing below the 1 year moving average and starting to flattening out, not necessarily that you're going to go down, could be a sideways move, consolidation pattern on the way up, but there's consolidation work to be done. If you're in a solid uptrend, you shouldn't be closing below that 1 year moving average. You should be bouncing above it pretty regularly. Next one, ISO. Whoa, okay. This thing already exploded, so I'm going to have to zoom in on, let's zoom in on the weekly chart. If I could get some clues. Weekly was Stan Weinstein's time frame. Most of it, 10-week, 30-week moving average. Usually it was a 30-week moving average. If you're above it, it's beautiful. Look at that. Ooh, above the 30-week moving average. Consolidation explode. Beautiful uptrend. Look at the Ichimoku cloud defined uptrend right here. All this because you broke out of a base. Above a bullish cross of those moving averages, the trend is your friend. Just beautiful, guys. And every time it came back here, beautiful entries, buying opportunities as you closed in on that 30-week moving average. Off she goes. Continuation breakout. So right now, this is a type of situation that's happening here. You're letting that 10-week, and maybe it's going to dip a little lower, let that 30-week moving average catch up. And once it's ready, once these moving averages catch up, then after that, you could go challenge to have a continuation breakout. But this, we don't know how many years it's going to last, but it's a definite uptrend, looks very good. So the closer you let that moving average catch up, the lower risk it is of the price falling down. And then after that, it's going to be ready. You're going to stay, your opportunity cost is going to lower because you're going to stay less long in the stock waiting for it to consolidate. And you're going to try to catch it when it's ready to break out the closest possible. But yeah, this one's way ahead of its friends. Off it went. And when I don't put a measured move, there's probably a measured move here. We could do it. But if there's no measured move, with Stan Weinstein's stage analysis, you don't have to use swing trades. You stay in. So if the stock goes 3x, 4x, 10x, as long as it's not closing below the 30-week moving average, you have no reason to sell. See, below 30-week moving average, it has a tendency to stay down. Oh, try to get it up. Got pushed back down until it went sideways and then went back. There's no predestined measured moves. Just let the price action do what it has to do and let it climb up. Global Atomic. Look at that. Ooh, not much trading here. Exploded. Definite uptrend. Above inclining 1 year, 3 year moving average. These things are beastly. So here is pretty much my volume defined base right here. And it's just up. And what it's doing now, it's consolidating sideways. So you let it do its thing. Let that 10-week moving average catch up. And this is a possible flag pull flag. I don't know how much time it's going to take, but let's say it consolidates close to that 10-week moving average. Then the measured move would be about 293. So once this resolves, this is sitting right now about 123. 2.5 bagger after this consolidation move happens. Insane. Global Atomic. Forum Energy Metals, FMC. Another beautiful one. Should I go back on the monthly? I have data on the monthly. Oh, look at that. Big picture. Ichimoku cloud descending, starting to create rising Ichimoku cloud uptrend. Look at that bullish cross. Look, good things happen above an inclining 1 year, 3 year moving average. Look at that. Refuses to close below. Look at that. The Ichimoku cloud. No. Each of these candles refused to close above. And when it was running out of runway, bam. It just exploded upwards. Beautiful entry right there. Beautiful, beautiful volume defined base. All the characteristics. You've seen this in when I did GV Portfolio. A lot of silver miners, they look like that. Gold miners. These are the type of Kirkland Lake gold type setups. Beautiful base. Violent first reaction. Guys got in too early. They got burnt. Oh no, it sucks. Uranium sucks. But look at that. When nobody's there anymore. Then here you have beautiful, beautiful entries. Exploded. Come to retest. Exploded. And right now it's slowing down exactly on cue. Monthly defined wall. Previous support, turn resistance. So right now, if you're in it, you just hold. If you want to get in, you could wait maybe 1 month or 2 months. I don't know how much time it's going to need to consolidate sideways. Let that 10-week, that 1 year moving average catch up to have a lower risk entry. And then when this catches up, the moving average catches up to the price action, you're probably going to get another great low risk, high reward entry and ride this thing going up, guys. What's the measure move? What's the measure move? Here's the measure move already in progress for that base. Remember, targets, bring the price action somewhere up. And after that, it creates another pattern. Then you evaluate another measure move. So right here, the target's about 322%. So the target right now is about 68 cents. And look at that. It brings you right about here. Right below another congestion area. Previous support, turn resistance. So I love it when it matches like that. All these wicks is buyers coming in saying, no, we can't go lower. So this is really meaningful. So previous support now turn resistance. So that 70 cents probably gonna have a nice congestion area right there. So that is how I see for energy, guys. Ooh, okay, fission uranium monthly chart, super early because look, like I showed the other charts, it's the first violent reaction. You want to at least climb back above that 3-year moving average if you can. But when you're starting to angle upwards, so that's very bullish. It's starting to set up. But on the long-term chart, look, you have that overhanging red cloud. That's going to slow you down a little bit. So for this one, you probably want to zoom in on the weekly. Time frames ripple. So if you have a breakout on the daily, if that goes great, then hopefully the weekly starts breaking out. And eventually, if you have many weeks of breakout on the weekly chart, then eventually on the monthly, you're gonna see breakouts on the monthly. So right now, this is the base, inclining 1-year, 3-year moving average, hitting that resistance, pulling back close to that 30 weeks. So maybe here this is a good low risk entry. Hopefully that 30-week moving average holds up, and then after that you could give it a shot to continue that stage 2 uptrend. But remember that there's that monthly chart. There's monthly defined resistance that you can't see here. It's defined on the higher time frame. That could slow us down eventually. So is this an A++? Maybe not, just because of that. We're just exiting that severe downtrend. But the building blocks here on the weekly chart are nice. If ever there's a close above 35 cents, 36 cents, this would be very, very constructive. Higher lows, higher lows, higher lows, above volume defined base. Looking not that bad, guys. Could say that's a stage 1 bottom, very close to a stage 2 breakout on the weekly. Encore Energy Corp. Whoo, stage 2. Look at that. Above inclining 1 year, 10 week, 30 week on the weekly chart. Breakout, never look back. Look at that. Bounce off the 10 week. Stan Weinstein called that the trader's way. 30 week, not even close to being challenged. Nice, beautiful consolidation. Exploded. It's consolidating. It's probably going to explode again. Let's look on the monthly. Ichimoku Cloud monthly. Wow. Pure violence. Starting to define. Ichimoku Cloud define uptrend. Volume breakout right here. Volume defined base right there. Wow, I don't know. This thing's on fire. I really love to see it that moving average catch up, get a good low risk entry. But if you're already in, then you're set. But if you want to get an entry, wait for this maybe to cool down a little bit. This one's way ahead of its peers. On the daily chart, it's consolidating. So I don't know how. So here, maybe there's an opportunity to enter based on the daily chart, because that monthly chart is just violent. Low risk entry, 50-day moving average. Beautiful, beautiful entry right here. Never challenging the 200-day. Kind of stretched from the 200-day. So this might consolidate a little bit. If ever it closes above the 78 cents, this thing could rocket ahead. What's my measured moves? Another pull flag. Pull flag pull. Maybe something like that. Target about 150. Right now sitting at 76 cents. It's in an uptrend. Uranium sector is looking very, 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 very nice. EFR, guys, look at that explosion, consolidating close to that 50-day moving average. This is approaching a low risk entry, guys, on that smaller time frame. Let's see how that looks like on the monthly. Wow. The daily ripples eventually will ripple on the weekly. And eventually on the monthly. Look at that. Volume defined breakout above this volume defined base. Monthly defined breakout. Confirmed previous month. Now you're hitting some Ichimoku Cloud defined resistance. And that's it. Once we finish consolidating, what's very bullish, consolidating above the breakout line, not below. And might, if it fails, it goes back down to the lower range. Higher lows, you broke out. You're consolidating above. This is now a wall, previous resistance turn support, very bullish. And you're consolidating right below. Oh, wait, Pat, wait. Okay, below monthly defined wall, so previous support and resistance in the cloud. So this is about to break out, guys. I don't know, maybe this month, next month, I don't know how much longer, but when this resolves, EFR is off to the races. This is a beaut. You have a confirmed breakout, guys. Just starting, man. This is insane. It's uranium sector. Insane. Here's a target, about 13 bucks. Now it's sitting. Patrick. Back. What? Why did you mess up my chart? Why? Remove. Oh, that's what I want. So target, I love it. Previous support, turn resistance, support, turn resistance. You see the proof that it's resistance. It wouldn't go up above here. Beautiful, beautiful target area right there. Measured move. Everything matches up. So this is it. 489. It's consolidating. I think anytime now, we're very close that this consolidation is going to be at its low watermark and it's going to want to explode higher. Above inclining 1 year 3 moving average. About to do a golden cross. There's lots of bullish details in here. And the target's 1340. So that's a double or triple from here. EFR. It's in the game. Whoa, this one looks a little bit like EFR. See that cloud sucking the price action back down. But it does have a monthly defined resistance, monthly defined breakout previous month. Oh, but it's below. Look at that, the wicks. Important support and resistance, a wall. See the wicks? No, 2 months in a row. Because you have that pressure, you're still in a downtrend. So if you don't zoom out, you think you're going to the moon, but there's this pressure going down. But every time you're testing it, that cloud's getting closer and closer, thinner and thinner. And now you're just above it. This is what I call a bullish transition zone. So this is support right now. I don't think it'll be going back down below that. Inclining 1 year 3 moving average, about to do a golden cross. Low risk entry here. Could dip a little bit, but the rewards are great. EFR, what's prettier, EFR's, hold on, am I lying to you? EFR is kind of trapped in the same way. So pretty much the same situation as EFR. Bullish transition zone, low risk entry. Once you're out of the cloud, this one does have volume defined resistance right here. Let's do a measure move. Non-greedy. I'm not taking that spike down in March. 100% move. So right here makes sense. Right where there's natural defined resistance, about 196. So this one, 88 cents right now. Consolidating, you might grab it a little lower, but not that much. And once you break out above 97 cents, this should double close to $2. Uranium, where is my yellow cake? Cameco. Monthly defined breakout confirmed. Pull back to test that breakout line. See that Ichimoku cloud defined support or resistance. Bring the price action down. It's just beautiful visual representation of support, of resistance with the cloud. Just love it. But here's a positive. You're starting to flying uptrend. Ichimoku cloud defined support. The green cloud. Bullish cross just happened. 1 year 3 moving average. Ultra uber bullish. And right now, a lot of people say, oh, it sucks. It's pulling back, but it's not. This is about to end right here. Maybe you'll get a wick down. And after that, when it starts going back up, you'll say, why not buy any? Why, Pat? 57%. Look at that. You could almost guess it. That this target is also going to be close to, see, volume defined node, congestion area, previous support and resistance. Everything matches up. I love when I see these type of measure moves that fit well with previous congestion areas. It adds a comfort level that this is a good area to take profits. So Cameco, right now, 12.29, not a double. But that's the measured move. So you could go down this list and see which one gives you better risk to reward. Is it a double, a triple bagger, or whatever? But chemicals getting almost out of that cloud, and once it's out, it should be a nice uptrend, guys. Wow, nice selection, Steve. I don't know much about these uranium stocks, the names. I've heard of Energy Fuels before. I remember that one. Chemical, I've heard that one. There's a whole bunch I don't know. But this sector is looking pretty sweet, especially now in the correction. It's almost some of the best time to do these podcasts is when it's correcting. So you get those low risk entries. Remember to sign up to Steve's newsletter in the description or top right. Click on the sign up button in the hover card and enjoy the free stuff, guys. It's great. All right. Ciao, guys. Do, 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 do.